Recording in
Good morning, everybody. It's Thursday, 22nd of June, 2023. Welcome to the webinar. It's going to be about 30 to 40 minutes long, and I just want to remind everybody that this is for educational purposes only and not intended as investment advice. We'll just go through a couple of slides first, and then we'll go straight into the analysis. So this is myself, Anil, Head of Trader Education, lots of experience, read that at some other time. Risk warning, make sure you understand trading is risky, and make sure you know what you're doing before you start. So today, as we do with Tuesdays and Thursdays, every Tuesdays and Thursdays, we look at some currency pairs, some indices, and we'll do our usual top-down approach. I also take requests. If anybody has a particular instrument they want me to look at, more than happy to do that. We're also going to take a look at some upcoming news. Obviously, a big day for the British pound and the UK indices. We've got the Bank of England expecting to raise interest rates, so we're going to have a look at how that may affect charts. And also, I'm just going to show you a few bits and pieces on the the free tool ZenFinex Plus and how to access them. We'll do that now, just sort of get it out of the way quickly. Here's the domain, it's free, join up. Got some great tools, and I'll show you some of those tools in a few minutes. We're going to focus on the economic calendar because of the news, and we'll see how other analysts on the platform are looking at different currency pairs through the technical views and featured ideas. And my main goal really is to have a look at some charts, show you how I analyze charts, and see if I can get you into a habit of doing the same thing over and over again. Got a few people joining, so I want to make sure everybody's here. Welcome everybody that's already here. Please, as always, feel free to ask me any questions, any requests, anything that you don't understand or want me to re-explain or explain. Happy to do that. But in essence, I do the same thing over and over and over again every single day. And that's how I look for trade setups, right? So there's nothing magical, new. This is it. This is how I do it. This is how I've been doing it for a long time, and it works. So you'll also notice I don't have any indicators, oscillators, moving averages, nothing against those particular tools, but I have just found in my past that price action is key. Price action is what is happening right now, and levels are what I've really focused on the most. Let's have a quick look at news, and I'm going to show you the reason why I'm going to look at news first, because we want to be aware of what is happening today. And here is where I'm going to use the ZenFinex economic insights. We've got a number of other tools. I won't have time to explain all those. I do other webinars where I go into each of these different tools and explain how to use them. But the main one that I use every single day is the calendar. And the reason why I'm interested in it today, because clearly, the Bank of England is expected to increase rates. So what we want to do is have a look at the structure of the British pound and the FTSE, see how prices have moved in the past in terms of when previous interest rate announcements have happened, utilizing this great tool here, which is the impact on previous events. And clearly, right, that's definitely going to move markets at 12 o'clock. So if you're a news trader, these are great days for you. If you're not a news trader, watch carefully what happens to price in the few hours after the interest rate announcement, because that's going to give us some clues in terms of what is the overall direction going to be for a period of time. Bearing in mind, there are also going to be levels which we're going to look at as well. Let's go back to charts. So we know 12 o'clock London time, we're going to be very careful. And I guess the reason why there's been more focus on this is because the inflation rate announced yesterday was actually expected to come down from 8.7 to 8.5, but in fact it printed 8.7. And if we look at the impact of that, you know, we had a big spike up, knocked probably some liquidity out in terms of stops, and then pushed the value of the British pound down. That's really as part of an expectation that the interest rates are likely to go up, and that weakened it, certainly for the 4 hours after the news announcement. So what we can do now is have a look at what happened during the rest of the day, right? So let's have a look at the British pound, and we'll look on a 4-hourly basis. And here we're looking at that, again, that dip from the inflation, and then really it's been kind of floating down, obviously getting weaker. Just let me just make sure the right view here. I just need to move this out of the way for a second. Sorry, my mistake here. I was looking at the wrong part. So let's have a look at yesterday's news. Increase. So take back what I just said. I was looking at the wrong part of the chart. After the news, prices for the British pound shot up, and now it's reached a peak. So let's now do a little bit of analysis and how I look at the British pound and see what impact it had and what it may do. And those of you who watch these regularly will know I do the same thing. So I start framing the market by putting some key levels to frame the market. So this is from a weekly perspective, right? So we're starting to build a frame. We then go down to a daily perspective and take a look at any levels that will become important. So visually speaking, right? So we saw that there was support here because look, prices came down, bounced off it, broke through it, messed around, fell through, became resistance, messed around, bounce, bounce, bounce. So this is clearly an important level. The other level that I want to have a look at is above. So if we look at this level here, this is another level. Resistance, support, bounced up, broke through, hit that level. So the 3200s are going to be interesting as well. So if we do get spikes, we're going to see some sort of action around these two levels here. In addition to that, we do have another level here, right? So why am I picking these levels, right? Just so to explain. I'm looking at where price reacted on a regular basis. So look, and you might say to yourself, well, you know, it hasn't really. Well, it has, because although it popped through, it immediately retracted, broke through, became resistance, popped through, hovered around this area, used this area to bounce off for this latest move, couldn't get past this 2279, right? So these lines and levels are things that we're going to look for as price approaches them. So I'm first of all just going to go down to a 4-hourly, and we'll take a look at much more closer levels, bearing in mind the daily levels that we've just put in. So we've got two levels, one above, one below. And we're looking again for reaction, price reaction, when it hits certain levels. So came up, hit this level here, came down, couldn't get above it, came down, couldn't quite get back down to this previous level of support. And really it's been grinding its way up. Again, interacted with this price at 26.54, and clearly a level that we need to keep an eye on. So from that, from the 4-hourly, so we've used weekly, daily, 4-hourly to get a window to what is happening today, what levels could be important for the rest of the day. And what we're also going to now do is provide some levels in terms of, oops, let me just make sure that's not there. So we can see that currently price is in this upward channel. Why is this channel not working? Just bear me for a second. Let's get rid of that one and that one. Okay. Build from here. I seem to be having a bit of issue with my charts here. Just bear me for a second. Yeah, I'm going to have to restart my meta quote. So let's just go back to this. And in the meantime, I will restart my MetaTrader. Once that's restarting, hopefully now it works. Okay, for some reason my MT5 is playing up a little bit. No sweat. So we're back to the 4 hourlies. I need to put a couple of lines that we missed when I closed it down. So I now want to put a channel. And the reason for this is that I focus really on support, resistance, and channels and fibs. They're my main go-to tools. And we can see here that from a 4 hourly perspective, prices retreated from the top of that channel and came to the bottom of this level, which it also looked back, back to 4th of May, came back to. So we're now starting to look closely at where our trading opportunities are going to be. So if we then go down to an hourly basis, we'll just take one quick look at it and see if we can see any fib levels that might help us. Right, so let's just talk through what has happened. And that will help us frame our idea. Is this going to go up or down? Clearly, news is going to have an impact, so we need to bear that in mind. But let's magnify this a little bit. And we can start seeing here that what has happened is that price broke out. We need to put a little level here. So it broke through these lower lows, lows, and this was the first point it gave us an indication that price is wanting to change from this downward direction into an upward direction. So as soon as this level broke this level here, it pulled down into the bottom of the channel, and then really it hasn't really come back apart from pullbacks. And that's what we're looking for. We're looking for pullbacks and entry points where we can participate in this upward trend, right? So I consider we are still bullish, certainly from a 4 hourly perspective, even though prices have been coming down, probably as an anticipation of the interest rate announcement. So what we're going to do is start mapping out this area here and see what we are going to do when we have a breakout. Let me just move that one here. As I said, please do ask questions if you have any on what I'm doing. So clearly what's happening is this big upward move here has reacted, right? So it broke through this level here, came back down into that level, and has been working its way up. The problem with this move is that it actually hasn't been able to break this level here. So let's put another level here. And you can see, starting from a weekly, I've started to drill down to smaller time frames to figure out where we want to be positioning ourselves in terms of areas that we'll be looking to. Oops. Just a second. So this whole area here, we've now got ourselves a window of opportunity. So what we're looking at, we can see now that we've closed right down to sort of, if we go to hourly basis. And as I said to you before, this is what I do every single day. I don't do anything different. And from this 1 hourly perspective, we can take a closer look to see what has been happening. So this was the move down yesterday, hit a previous level of support. Remember, going back, I won't go all the way back, but it was this level here, really where this broke out. So it's really come all the way back down to the same level and bounced off it. So now what we're in is a bit of a holding pattern. And what we really want to start looking at is, okay, so when the news comes out, if the interest rate is going to be as expected or higher than expected, which direction is it going to go? Now, we won't know that at the point of news, because what will happen at news is it will spike up and down, and it will probably be looking to take out stops here and here before it can decide which direction it wants to go. So from a trading perspective, what we want to do, we want to wait for the news to happen, which will be in about 4 hours time. So 4 more candles will print. We're roughly in the middle of this range here. I'll start making these a little bit more accurate. Right, so we can see here, creates a bit of a range, broke out, went back into it, came back to a previous level, hit it again, but now it's forming a little bit of support. This is a 1 hourly, so we won't really know what has happened to this candle until the end of the hour. But what I'm really looking to do is to watch for these areas here, because when the price spikes, if it spikes, right, it's got to take out some liquidity here and here. And it might well be that there'll be like a spike up and down. It may initially start going up, and then it might come down, or it might initially go down and then back up. What do I mean by that? So now let's go back to our tool, our news tool, and see what happened previously. Just bear with me a second. So now we've got ourselves some areas that we're looking at. Now we're going to try to focus in on what happened when interest rates were announced previously. And we're going to go back in time a little bit to see when interest rates are higher than expected or lower than expected. Because what we're really trying to do is to try to get some sort of bias in terms of direction. So if I look at event chart, just give me a second. Might be this one here. So with this information, right, what we're really trying to do is plan out what we're going to be doing when news. We're not going to react to news immediately, but we're going to have an idea on if it's as forecast or less than forecast or better than forecast. So let's just have a look. So what this is saying to us, volatility of price, I think it's the other one that I want to look at, which is the event chart. So this is this increase in interest rates since June 2022. So it's hit expected every single time, right? So when it's hit every time, so the yellow, by the way, let's just make sure we understand this. Forecast is this yellow box. I hope you can see that, right? And blue is, let me just make sure, actual was the purple, forecast was yellow. So what this is saying is it didn't exceed or fall short of the forecast. So the forecasts are historically looking pretty accurate, right? So what we then go back and say, okay, so if it's been pretty accurate in the past, there's a probability that will be accurate this time. So the 4.75 is what we're expecting, which is an increase, right? So we go back to our event chart and we look at how volatility was let's just so we look at this here 1 second. So 14% of the time the price ended up bullish, right? 86% of the time it ended up bearish. So what we're really looking to do is say, look, from a pure 1, 2, 3, 4, 5, 6, 7, from 7 last previous events, they've always shown a bearish view after the news. Bearish view meaning that we expect the pound to come down. However, a lot of these previous events were, if we then go back to previous events and we look at price chart, so we can see here, I hope everybody can see these charts because they're quite powerful. So these little diamonds are when price was announced, and then you can see what impact. So if I click on this one here, this was August the 4th. Let's make sure it's the right one, August the 4th. So actual was the same as forecast. So let's now look for anything that was different from forecast. We looked earlier, didn't we, that it was just 7 out of 7 times, 6 times it was as forecast. So we're expecting to be as forecast, and it was always bearish after the news announcement. So if we look at bearish, this is bearish, and we're looking at a short period afterwards. So if we look at this one, bearish. 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 So I'm not suggesting that we take a trade based upon this information, but what we're trying to do is prepare ourselves for when the news comes out. So my mindset now is, if price, or sorry, the interest rate announcement is as forecast, I expect it to dip based upon the analysis that I'm showing you here, right? Hopefully that makes sense to you. So I'm utilizing news announcements and how they reacted previously. This is quite a good tool because most of the time, you know, you're not able to go back on your charts and say, okay, what was the impact of the interest rates or any other news, by the way. And this just gives you a little bit of a heads up in terms of what may or may not happen. I'm not going to suggest to you for 1 minute that this is, you know, guaranteed, but at least we can start looking at what happened in previous. So if we just look at this a bit more closely. So in March, right, the actual was this. I want to make sure that we can go back into the volatility. And so we know that most of the time it's actual above forecast, actual. So actual matched forecast, because remember, 6 times out of 7, it matched. And what we can see here, that 86% of the time on the last 6 events, or the 6 events out of the 7, price went down. So it'll be really interesting to see price of the British pound USD, just in case, you know, I'm losing it a little bit. Great, so hopefully that helped, because it's a great way of utilizing news events, because, you know, there are 2 types, or more than 2 types of traders who trade news. There are ones that, you know, react to the initial reaction. They see a big spike up, they buy it and try to get a little bit out of it before it comes back down again. And those of you who have traded news or watched news and the candlesticks and bars at news time, we know, don't they, most of the time they're volatile. And what different types of traders, some will just stand back and say, okay, let the mayhem die down a bit. I'll then take another view and try to figure out, is the overall momentum or the overall trend of the market is going up or down, and then look for pullbacks into that particular trade. So lots of different strategies on how to play news. I'm the one that wants to watch news, let it settle down for a period of time. What I mean by period, I can actually look at this tool here and say, well, what happened 15 minutes after the event, right? So 15 minutes after the event, it shot up. An hour after the event, it shot up and came back down. And if I look at it for on 4-hourly basis, it shot up, shot down, and then the true movement kind of, or certainly the movement, a few hours after the news kind of presented itself. And again, if we look at our live charts, so this was May's number. Let's see, we can look at our charts. So hopefully you can see the way that I'm approaching this is looking at news, looking at how price reacted to news in previous events, whether they were actual against forecast. I then look at my charts and do a top-down analysis in terms of starting with the weekly and ending up, right, with everything taken into consideration in terms of levels from daily and weekly levels. Where am I now? What do I expect to happen in terms of me staying out the market, right? I want to see, for example, if price first shoots up, knocks out these stops, and then comes down and breaks through these levels, I know that this downward trend will continue, and I'll be looking for ways to get into the short. I've got a couple of questions. Let me answer this question first. Does your platform have live analysis with live trading for understanding? Mr. Gupta, yes. So one of the things that we're doing, I'm going to be having a live trading room where I'll be trading live. This is more for market structure and analysis, but I'm a trader, so I'll be taking live trades in live trading room. If you're interested in sort of joining that live trading room, then more than happy to take your details, and we'll let you know when that's up and running. It'll be a few more weeks, and then these webinars will turn into like a live trading room where I'll have all my charts up and I'll be placing trades, etc. But not in this webinar environment. It'll be an area just for a group of traders, basically, and you're more than welcome to join. You just need to register for that. Free, by the way. There's no no costs at all. So I hope you found this interesting. I'm going to ask you a question, actually, because I do enjoy the teaching process, and I enjoy listening to people in terms of where they are with their journey. So are you a beginner, Raj, or are you intermediary? Are you expert? And what are you looking for in terms of how we can help you? I can help you in terms of improving your profitability and your consistency, which is what it's all about. More than happy to answer any questions. I will leave my email if you want to email me and ask me any questions. I'm here really to help. ZenFinex kind of have a overall structure that they want to give this education for free. So there's no cost. We don't charge for anything. This is purely passing on knowledge to help traders with their journey. Yeah, sure. 6 months is a good time. Hopefully you've the one piece of advice I'm going to give you, right? You've been practicing for 6 months, right? The that part of your journey is exploring, right? You're exploring moving averages, oscillators, this theory, this guy's ideas, that guy's ideas, and that's normal, right? But what you have to start doing is honing something down. Honing means, narrow down what you're looking at into something that fits your lifestyle. If you're working, you've got to fit it around work. If you're not working and you're able to trade sort of full time, the most important thing you've got to learn is a strategy that works for you. Now, I've tried 100, maybe 1,000 different strategies, right? I've tried every single moving average, every single oscillator, every individual's theories about how the market moves. And it boils down to this, for me. It boils down to watching markets, how markets move with support, resistance, and channels and trends. That's it. I've eliminated almost everything, from, I won't even say almost, I have removed everything in terms of indicators. I just use levels, because levels are where price react, and where price react, they tend to react again. And what I'm looking for is, once it's reacted, how it moves when it's back to that same area. For example, right? So we had this peak here, formed into, and remember, these are 4-hourly candles. For a period of time, it got trapped into this area. Trapped meaning that this was a fair value at that moment in time. Prices dropped, pulled back into this area, and then dropped to a previous level that we had marked out previously. So the point I'm really trying to make really is, there are some things that work and there are some things that don't work. For me, this works, and part of your journey, right, is finding something that's going to work for you on a consistent basis. And I don't know what that will be, and maybe at this stage you don't know what that will be, but what you have to try to do is narrow into something that, once you have decided it, perfected it, tested it, perfected it again, then you can go and start sort of being consistent at traders. The biggest downfall for a lot of traders is they're jumping around from this strategy, this guy, that guy, this guy's signals. And all that really is going to do is going to lengthen your journey, right? It's going to take you into different alleyways and blocked roads for only you to turn back, start again, remove those ideas, and start that journey again. And my job really is to say, look, a lot of methodology doesn't work, right? For me, and I always have to caveat, because I'm sure somebody will come along and say, well, it works for me, right? So I always caveat and say that a lot of things that I've tested, and remember, my background is algo trading. I code strategies, I code algos for trading. And to be able to code, you need to understand deeply how price moves, the way it moves up, the way it moves down, the way it hits levels, the way it doesn't. And that level of understanding has boiled it down to this. This is all I need. I can start from a new chart, and if you haven't been to these webinars before, I literally start with a naked chart and go all the way down to 1 hourly sort of zones where I'm looking for price to do certain behaviors, and from that behaviors I'll be looking to place trades. So that, in a nutshell, hopefully helps. Let me just I'll pull my, actually I think I better write it here. Let me just type my email address here. Apologies to everybody else. And I'll just reiterate, we're not selling anything. I'm not selling anything, any mentorships or courses. It's just like, how can I help you improve? Because the hurdle to improving at trading is noise. And if you've been doing this for 6 months, you're inundated with noise, right? use this average, use this oscillator and average, and utilize this average and oscillator with this, and this. And before you know it, right, you're going around in circles, right? So simplicity is what I'm going to suggest. Yes, I think I can. Let me just do a quick gold analysis. I've got a request here for gold. So let me pull up gold. I always enjoy looking at gold because it's one of my favorite instruments. So again, I'm going to get rid of all these lines. Like I've drawn these levels in the past, and you know, there's a level here which produced a beautiful short right actually back into an area. Let me explain that by getting rid of everything. Let's remove all our lines. And sometimes people say, well, why don't you leave your lines in there? The reason why I don't leave my lines in there is because I want to start from a completely fresh perspective. I don't want to be biased with old, stale lines. I want to know that when I look at a chart, right, it's where we are right now, okay, taking into consideration everything that's been going on. So let's just start from a weekly perspective, start framing the market, go to a daily, do the exact same thing, find levels which are interesting and have had some sort of reaction in the past. Because look, we can see here that this whole area here, resistance, broke through it, support, broke through it again, hit its head on here, and I'm going to draw another level here. So we're starting to see with gold, right? We're seeing an areas. So now we're on a daily perspective looking at this area here. We've already put some levels in here which we need to be careful of. And what I mean by careful is that they could be areas for stops, for targets, and even entry points. So let's go now down to the 4-hourly. From the 4-hourly perspective, let's see what's happening right now. I want to make sure I'm at the end, right? So again, what I've done, exactly the same thing. It takes minutes, right, to start framing the market. And you might say to me, you know, are these lines accurate? Just watch how amazing these lines behave, you know, in multiple time frames. So let's see what levels I can see, which will be interesting to us right now. So look here, let me put the cursor on. Resistance, broke through it, went straight underneath, hit this level, hit that level, hit this level. So you can see, even though I took all the lines off and I started from a weekly, I've already started now to see where price has reacted to certain levels. And how long did it take me? 30 seconds, right? And now we want to find out, where are we in the context of everything? So we can see here that this area, we took a trade here all the way down to this level. Why this level? Because this level was interesting to us in the past. And as I said, price comes back to these interesting levels. It's tried to bounce off it once, twice, 3 times, 4 times, try to poke its head, went up, couldn't get higher. Let me just start getting it a little bit. So what I'm trying to do is I'm trying to build a story. The market, the charts is like a book, right? And like a book, you have to start reading what it's telling you, and it's giving you masses of information, right? You don't need moving averages and indicators or anything like that, because it's actually written the story for you, right? The story is that this level above here is tough. It doesn't like to get above this level here. The story in this book is telling you that this is an important level, 1938, bounced off, bounced off, bounced off. We can see here that every time it bounced off it, it couldn't get higher than its previous levels, right? So those of you who've seen my other webinars where I talk about how to define trends, etc., will be easily able to see that this clearly, right, is weakness. Gold is weak, right? There's nothing really in the middle. If I now pull back out again, right? So we've got this area here. It's tried to poke through, went up, bounced, 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 broke again, but it bounced again. So this is the fight, right, between buyers and sellers on gold. And if we then put some other levels lower down, so we can see here, prices hit this level here. I'm hopefully you're following me, because what I'm trying to do is read this book, and the book is full of pages, and those pages are telling me everything I need to know. And once I know everything I need to know, it becomes very easy to determine direction. It becomes very easy to determine where I want the price to pull back from. It's very easy then to see where is it likely to go to. So we can see here, right, this level here. I know it appears that I'm drawing lots of lines, right, but they are lines for a purpose. Bounced off here, broke through, bounced off here, messed around. So this clearly is going to be a level. I think we probably have to include this. So this is where I'm really starting to get down into which direction, where is going to be my stops, and where are going to be my targets. So what we can see here, that as price came up, it fell, and then it used it as support. Always, you know, when resistance is broken, it becomes support. And therefore, I've now started to map out all these levels here where I will be looking to see how prices react. I've already determined, not fully yet, because this level here, right, there's a battle going on. Let's go to this slightly closer. What is this battle? This battle is that we've already determined that 1937 is a level that the market, or the price of gold, should I be more specific, is struggling with, right? Because every time it hit it, bounced up, bounced up, bounced up. Couldn't even get there, bounced up. But then it hit a level of resistance. Tried to break through it, but immediately buyers came in and pushed it up. So this is it really interesting. So as we see this channel appear, just pull that back a little bit. I need to just adjust that a little bit. So we can see, right, clearly there's a downward channel. This, it couldn't hold, it couldn't bounce off this level. And even when it came down, it tried to push back, but it's now pushing down. So already I'm thinking to myself, look, there's weakness in gold, but how far can that weakness really go? Can it get back to these levels? Will it come back to this level here? So I'd be looking for an opportunity. And if I now go to the hourly charts, and remember, this is for education. Don't take any trades based on what I've just said. What I'm trying to teach you is a process that you need to develop and follow over and over again, practice it, test it out, and then build on it, build on it, build on it, right? So hopefully everything I'm telling you is logical, right? Levels being supported, being broken through. This level now becoming, remember, this was resistance at 1937. It's now starting to form a level of, so this was support before, this blue line. Now it's becoming resistance. Tried to push down, came back, but couldn't get higher, right? Important information now. So what we're really looking to do is to see what is going to push the price of gold down. What is, and if it does go down, where could it come down to? We've got a massive long wick here, right? So this is telling us, and again, this page of this book is now telling us that during this period here, it broke through this previous low, right? And wasn't able to close. It bounced straight back into this range here. So let's now do this thing here. So all this information now is starting to become very important in terms of now, from a granular perspective, we can start seeing, is price going to hit the bottom of this channel and go back up, or is it going to break down and then retest all these levels that have been created in the past? Because this book, right, that I just talked about, is telling us a downward story. There's still price moving up, But generally speaking, what we want to try to do is look for higher levels for it to come down. So what we're looking to do is to utilize this level of resistance now, which was previously support. It broke through there, took out some liquidity here. Danger sign is that it went straight back into this area here. So if I then go back to the hourly, this will make a little bit more sense. Right, so it's gone back down to the hourly perspective. We had a little poke down here. It's knocked out the liquidity that was underneath here. So all the people that went long may have put their stops here, right? They may have went long. It came back, right? But it couldn't find the energy to go back. So we're in a bearish state of mind. So then if we're in a bearish state of mind, where are we going to look to get in, right? Will it come back and retest this? We can see here that these little wicks that are poking through, there'll be stops there. Absolutely no doubt. So there'll be some liquidity here. And what the market tends to do is to, before a move, it will pull up this liquidity. So there'll be plenty of orders here. Those guys that went short, you know, they've probably moved their stops to here, thinking that if it keeps going down, they'll bring their stops down. But what the market has a habit of doing is eating up this liquidity before it comes down. So look, there's still plenty of points to be had in there. So how would I play this, right? If I could see price move back up into this area here, I would then look to see weakness. Because if there shows weakness, what it may do is it may pop through, but I'm looking for ways to get short. And what I'm looking to do is to see how this price will move back into this area for it to eventually come down to this level here. So that's kind of what I'm looking for from this perspective here. Hopefully that makes sense. I'll just see if there's any more questions. I don't think I'll have time to do oil because I've run over a little bit. Just double check a few things here. Yeah, I think unless there's any more questions, I've overrun by a few minutes. Let's just go back to the slides again. And, you know, so the calendar that I've been using all the time, just log on to this portal. You've got my email address. You know, feel free to email me if you need to, and I'll try to help you all the way I can, or as much as I can. Thank you, my pleasure. How to trade this market? I think I've just shown you in gold. So on that, obviously, you know, when I'm in the live trading room, it's a different scenario. But in this sort of webinar, I do the analysis, show you how I look at markets and what have you. So on that, I think that's all the questions. Let me just make sure I haven't missed any questions. Thank you all guys for coming today, and I look forward to seeing you on Tuesday. Keep an eye out for the Bank of England rate hike, or the forecasted rate hike, I should say, at midday. That's going to move the markets around a little bit. Watch how that reacts, and then redo your lines, and then you'll start seeing these trade setups everywhere. On that note, thank you very much for attending. I appreciate your questions and I appreciate your attendance, and see you on Tuesday.